Greetings, everybody. It's Jeff Scott here. This is going to probably be a short one. I'm still getting over my cold and, frankly, just play last week's report. Nothing's different. Markets certainly dropped on Monday, popped on Friday. If you look at weekly charts, it was pretty much a doji, where they ended very much where they started. Let's take a look at what we got. Obviously, the government shutdown's over for 3 weeks, and we'll see what happens with that rhetoric. As always, it's for education purposes only. I'm a doctor, not a broker. I'm independent, and trading involves risk, and you and your loan are solely responsible. Not going to spend much time here except to say I started with Can't Slim Improved by John Person, and I have a number of folks on this that I've been influenced by as well. TradeStation, Thinkorswim are my key assets for trading. I would need those on a desert isle because of all the extra indicators and things I put into them. I use HGSI and EdgeRater for post-market analysis, and I use the seasonality programs to supplement. Technicals trump seasonality, and I always look at technicals first. Here's the website for HGSI. The most important thing about it is a free 30-day trial, and investing strategies are hundreds of movies by Ron Brown and I and others. So I've been talking about, are we on the way back up, and was it a V bottom? We've had a very nice run since December 26th. Or are we just setting up for better shorting? I don't think it's ever easy. It's certainly not easy right now. You've done better being on the long side, but there's still a long ways to go on this market. Your market approach must change with the cycle. I did get much more aggressive at the market bottom. I still have less positions than I've had at most times when I've been bullish, so I still got some money on the sidelines and will put it in as I get closer as I get stronger in my beliefs. We'll talk about the 200-day moving averages that are looming overhead, and I think to me that's the next line in the sand. Clearly, Friday was a good day for anybody but utilities. Here's broad-based sector components, and you can see mostly green. If we look at the major markets, the arrow points out the 200-day moving average. So you still have a ways to go, maybe 70, 80 points on the E-minis, 300 points on the NASDAQ, getting closer on the Dow, quite a ways to go on the Russell. Until proven otherwise, we're in a trading range in between those two moving averages. That's as long as that 50-day moving average holds support, and it did nicely on the down days this week. On the weekly, it would be the 50 weekly moving average, which is the overhead resistance. So we're coming up to that 17-day pretty much across the board. Again, you can see right here on the Dow, we didn't do much. We had a big drop down on Monday and spent the rest of the week getting back to even. Q report. Now, interestingly, although the markets didn't do much, when you look at the Q report, you could see that 9 out of 11 sectors were up on the 5 days. 9 out of 11 were up on 1 day, pink being 1 day. So on the week, information technology, utilities saw a resurgence on the week. But on Friday, which was the strong day in the market, it was all about energy up and utilities down. If you look at the sector rotation model, energy was on top on Friday, and energy is a turnaround. It had been weak over the last several months. And if I break down on energy, I can start to see coal, then oil, gas, equipment, and services are up at the top. From a rates perspective, they held pretty steady on the week, maybe a small little drop. And if I look at the yield curve, it continues to move down towards a inversion line. If it gets below this pink line, it will be inverted. AD lines, interestingly, look at these large caps here. The AD lines are almost at an all-time high on the AD lines as the indexes fight their way back on both. On the NYSE AD line, you could see that all the major ETFs had a little bit of a flat week, while the bonds ticked up as interest rates were steady. Most stocks are trapped between the 200 days, so that only about 30% or less of the stocks are above the 200. 70% or more are above the 40. So that means you're in a downtrend stuck between the 200 and the 400. If we look at the very short-term indicator, the 3-month new high, new low, it turned back from its top a little bit, but it's still more overbought than not. So short-term, a little bit overbought, but longer-term, we are more oversold. Daily McClellan continues to shoot up on the summation index and the oscillator, and no divergence or anything on the weekly as well. Current buckets, still 88% of stocks are trading above the midline on their Bollinger Bands, and you could see not a lot are above their Bollinger Band, so overbought, but not to the point where you have to see a reversal. No Hindis for the 3-month period on here, and I don't expect to see one until the new highs start to go up. Notice that the new highs on 52-week new highs on the NYSE broke 1% for the first time since December, beginning of December, and still have not gotten there on the NASDAQ. Market tone. These are times to be bullish when everything is green, and when you look at the sectors, except for staples and utilities, the sectors are green as well. Canaries in the coal mine kind of reflect the whole market. Clearly, we're in a down channel, broke above the channel, is now riding the top of the channel, and is above support here with a number of major moving averages. Know your news and earnings. This is a doozy of a week, folks. I'm going to start off with a FOMC meeting on Tuesday with a press conference on Wednesday. The Fed has gone from a big negative to the markets to a bit of a positive. So it'll be interesting to see how it ends up this week. We've got GDP on Wednesday. We got jobless claims and personal income and outlays on Thursday. And on Friday, we've got not just a ISM manufacturing and PMI, but we also have an employment report for the month. The other side of the slide tells you, I think, the other issue of this week, which is big times earnings reports, including such stalwarts as Apple after the close on Tuesday, Facebook after the close on Wednesday, and Amazon after the close on Thursday. I suspect the news reports will have as much, the earnings reports in the Fed will have to do as much with your performance this week as stock picking does. As I say in the lower right-hand corner, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Market thoughts. Trump clearly appeared to cave at the end to end the shutdown. Market swung widely at the beginning end of the week to end mostly flat. Big week on news and earnings. Fed meeting, GDP, employment, China, Brexit. Oh yeah, Venezuela having a coup, or maybe having a coup. Market still feels like it wants to go higher, but in addition to news and earnings that are likely to move the market, we have looming resistance overhead at the 200. And dollar weakness on Friday led to a rally on gold, but can the dollar stay weak in the setting of a strong U.S. and a weak U.S. and ex-U.S. economy? As I said, I don't expect this to go long this week, and it really is similar to last week in what we're going to see. If we look into trade stations, since I've got it open, I believe, let me move this thing out of the way, there it is. And just look very quickly at how I look at the indexes, and we'll just look at the E-mini. I start with, am I in a buy or sell signal? I'm in a daily person buy, weekly sell, monthly sell, just like last week. So I have a short-term buy and a long-term sell. So that's a retracement in a downtrend. I look at my paint bar colors. Blue is neutral, green is bullish. So we're getting more bullish on the weekly. So maybe this week we get above that yellow line and get a weekly buy signal, which would certainly be bullish. I look at where I am in the outer envelope. We're in the middle, so we're nowhere that says we have a reversal coming. I look for evidence of MACD divergence. When I see green, it means I'm going to probably flip to go higher. When I see red, I'm going to go lower. I don't see any. I look at my weekly bongo, which is decidedly green now, and I look at my high jump, which at 77 is still in the neutral range. So I see a short-term retracement in an otherwise negative market, but I got to play what I got, and right now, short-term, that's bullish. NASDAQ will look the same way, except the bongo here has not turned green. So I'm not going to go further in those indexes because they look the same. If I go into HGSI, and I'm going to go into Major Markets Plus, and let's Did I not put IWM back? All right, let me add the Russell back to this. I thought I did that. I must have done it on a different computer. All right, so 24 groups, perfect. So I'm going to put them in top-down view and make sure my raw combos were highest on the top. So mid caps, industrials, NASDAQ, gold, small caps. You know it was a good day on Friday, but on the entire week, you see a lot of ones here. Semis were up nicely, as was gold. Gasoline was down. Volatility was down. Start looking at some of the major indexes very quickly. I know the S&P 500 is right in front of my face. So, as I said, I don't really think a whole lot has changed from last week. And, we're still in this scenario where are we going to run up to this 200 and fail? And look at how many times we failed at it here. While it was support here, it's been resistance. And, we're not that far away, but for now, we're going to be bouncing around between those moving averages. If I look at the Dow Jones Industrial, same thing, closer to the 200. If I look at the NASDAQ, same thing. And if I look at the Russell 2000, now you notice these green bars here, these are Eurekas. So we had 3 bullish market signals. Now, sometimes when I don't see the red, I want to go look at it in a different view. And yeah, we had a bunch of phoenixes as the market sold off. And here's a couple of those Eurekas here. So markets have strength. We've got resistance ahead, probably support underneath. And you could see how the markets touch that support multiple times. The U.S. dollar, sold off on Friday. I'm not sure if it was just a technical bounce of the euro against the dollar, but if you look at the gold, it certainly broke out on Friday, as did silver, which was the benefit of having the weak dollar. So, and then volatility has continued to come down, although it's not quite at the levels that it was last year. So I'd summarize by saying I think we're in a trading range until I break above the 200. I'm still going to be a little bit defensive with cash on the sidelines, but I am positioned long in this market right now. If I go to industry group view, this is what looks a lot like last week, where semiconductors are up at the top. We'll look at a couple of these. I'm only going to go 3 or 4 groups today. I'm still not feeling the normal, and I just want to get this out. Micron, I've been suspect against it, but with the bongos, the breakout here still has overhead supply, but that's about 20% away. Weekly bongo turned green. I think this looks interesting, although I'm a little bit suspect, and notice the multiple 3. Just tells you how beaten down it is. AMD is probably my favorite in the space. It's moving up off of a confluence of moving averages on Friday. I like that chart. Xilinx broke out. To me, it's run too far for me to chase it. And then NVIDIA also looks interesting here. Obviously, it was a fallen angel like Micron, and it's not always that past leaders can't lead, but they usually don't lead in the next run up. Second group down, interestingly, is steel raw materials. If this all does get built, there's going to need more materials. Rio Tinto, and Vale had a flood at the dam and some deaths, so that may also reduce some of the supply in the market, hypothetically. Rio Tinto looks like it's breaking out here above the 200, pocket pivot, Kahuna mobile breakout. The one I'm in is Cliffs. It pulled back up into the 200. Kahuna, weekly bongo turned green. It's got some good earnings, at least in the short term. Pays a dinky little dividend. BHP Billiton. So those look interesting. At least Cleveland Cliff looked interesting to me. Internet media. Facebook continues to deal with its issues on data, But like the semiconductors, it looks like it's put in a bottom, is moving its way up. I wouldn't touch this until after earnings unless you have some insight that I don't have. Twitter, I'm not a Twittering guy, but I'd like to see a break above the 200 and hold before I get that excited. Google, similar. Again, the story is the stocks are trapped between their 200-day moving average and their 50. At some point, that 50 is going to start rotating up. It'll get narrower and narrower, and then they'll declare itself to the upside or the downside. Communications equipment. Apple does have earnings coming out this week, so I think that's something to be aware of. It bounced on Friday. Apple, you look at its multiple, it's compressed compared to where it usually is. Obviously, people are concerned about its transition from selling handsets to being a service provider. Pocket Pivot and Kahuna, I've got a position in here. I'm not sure I'll hold it into earnings or not. Nokia, I don't know anything about this stock anymore. They used to make some cool handsets. Pays a 3% dividend. Big breakout this week. Not my stock, so I'm probably not going to say much more about it. Specialty pharma, this has been a reset group where a lot of the marijuanas are going to fall in there. Thank you, Ron Brown, for updating the groups. Canopy growth breaking out here. This is on my, one I'd like to buy if it pulls back. The other one that I've been in and out of is Kronos, which is broken out here. I wish I was in it now. I made some money in it and I took profits, unfortunately. Zoetis is an animal health, Aurora Cannabis. And Tilray, I have a small position in, but this thing doesn't appear to want to do anything. I know, as Ron pointed out, they just had a lockup expiration. In the essence of saving my voice, I'll take a look at exploration and production and semis, then I'm going to stop. The oil exploration stocks have had a little run, but they're all way down in their patterns. Here's Hess. The pattern's the same. Occidental, Devon, Cabot, a little bit higher. I think they have more gas exposure, natural gas. Whiting. I own a couple of these plays. It's probably nice to buy them when they're cheap. It was nicer to buy them when they were cheaper. But none of them have patterns of wanting to go out and load up the farm. They're all oversold bounces. And then lastly, semiconductors. These have done very well. The manufacturers along these. Lab research has run right into resistance at the 200. Applied materials looks like it's going to do the same thing. The earnings per share growth doesn't exist, but they trade at small single-digit multiples. They'll have, again, similar chart patterns, Taiwan Semiconductor. So I think there's some places to play in. This week, I did find some shorting opportunities, but none of them are ready, so I'm not going to highlight those. Let me show you my bond watch from this weekend. Take a look at industry groups. So I had a number of REITs. The healthcare REITs and some of the gambling REITs look strong and paid big dividends. Semiconductor devices, several of those look fine. I'm just going to go through and bang them out very quickly, 44 charts in 5 minutes, and then we're done. Autodesk fundamentals look strong, breaking out above the 200. Kahuna, mobile breakout, weekly bond goes green. Avaya Corporation, this is certainly a pullback, but it's got earnings per share growth coming in. Looks like a turnaround play to me. I like it. Everything here lined up appropriately. I like Avaya. MongoDB, this is a stock that's had a big run going sideways. Have to clear this PSAR dot, but one of my favorite charts of the lower left upper right-hand corner. Paycom, I've talked about multiple times. The time to buy was probably about 2 weeks ago when it broke out here. It's been a great performer over the last couple of years. C Limited is another software company. I saw those pocket pivots. I noticed everything's breaking out, moving up higher. All the moving averages have turned up. That looked interesting. Tableau, fundamentally an expensive stock to me, but a leader in this market. Verona Systems, this is a pullback, breaking above the 50. 1 second. Here is First Bancorp, regional bank breaking out to recent new highs, earnings per share growth greater than multiple. Exelixis, I've talked about this several times as it broke above its 200. It's pulled back to the 17. Unlike most of the stocks we've looked at, it's had a golden cross as the 50 is now broken above the 200. The 17 is above the 200. Could be in the camp of small cancer companies that could be bought out. Insight, same story. This is broken above its moving averages. Short-term good earnings per share growth. It does have a marketed product and a pipeline. I put this in the small cancer companies that could be bought out as well. Finisar, sideways move to the 50, mobile breakout from a squeeze. Great earnings per share growth. I like that picture. High multiple, but big growth rate. JD.com, sort of a bottom fish. Someday this thing's going to go up. But you got a Kahuna, pocket pivot, mobile breakout from a squeeze. Netflix, pull back on earnings, seems to have stabilized and is getting ready to go higher. Overstock.com, I mean, is this a growth stock to buy? No. Is it an interesting pattern to me? Sure, it's come down. It's got a higher low, higher high, broke above the 50. Multiple kahunas and a mobile breakout from a squeeze. I'd be playing it on a technical play, maybe trying to shoot towards getting most of that 200-day moving average. Jacobs Engineering, another pullback, broke above the 50. Good earnings per share growth. Probably not one of my favorites, but one I'm going to watch. Remember, this is a watch list, not a buy list. Discovery Communications A, good earnings per share coming in, sitting right down at confluence of its moving averages, waiting to see if it breaks. Restoration Hardware, a name that if you go look at the earnings for this year and next, fundamental changes occurred in this company. They've created probably the second most exciting retail experience out there after Apple, restaurants and everything. Earnings are not until end of March. United Rentals, another play on if we build a wall, you're going to need equipment. Turnaround play. Quanta Services Power, PWR, great earnings per share growth. Look at that multiple breaking above the 200. There weren't a whole lot of stocks breaking above the 200, so when I see that, I get excited. Fortinet, uptrend, pullback, sitting right on a place where I'd expect it to bounce, but let it bounce first. You need some energy, pocket pivots, or kahunas to come in. I think Fortinet's getting ready to move. GoDaddy, a similar pattern, have to get above the 200. Hoya, another beaten down Chinese internet play that looks like it's ready to go higher. Notice there's nothing above it, so there's not a whole lot of overhead supply except for people that bought it 4 or 5 months ago. It was an IPO. Will it make an assault back against its previous highs? I'm going to play that one probably early in the week. Bazan, another Chinese play, IT play breaking above its moving averages, still has a long ways to go. Anthem, Insurer, pullback down to the 200, just broke above the 50. Good fundamentals. CareDx, a play on personalized medicine. I've missed this thing the entire run. You can see on a weekly chart it's had a huge run, and now it's been going sideways. Why would I be interested in it now? It just looks constructive compared to the rest of the market. Doesn't have much in the way of earnings per share growth, and I'm going to watch it. Insulet, PODD, pullback, basing down here. Again, I'm not buying these. I'm putting them on my watch list, but I looked at the earnings per share growth, and it got me interested. From a MLP and a dividend payer, here's a 7.7% TGE, Tallgrass Energy. Bottom Line Technologies, another online payment processor. Again, like Betty stocks, in between the 200 and the 50. Silver Wheaton, I'm not sure the fundamentals can support a much bigger move, but a breakout, a base, high base, and a breakout again with a mobile breakout from a squeeze, pocket pivot, and kahuna. EPR, one of those REITs, entertainment REITs, pays a 6.1% dividend. HCP, a medical REIT, 4.9, Medical Property Trust, a medical REIT, 5.7. MGM Growth Properties, a gaming REIT, 5.8. Reality Income. I can't remember what this story was. All about creating steady income. You can see it's got a nice dividend play, 4.1%, and good earnings underneath. Certainly sitting at a technically stronger point than most of the stocks in my universe in a clear uptrend. Jinx, CSIQ, Solar Edge look like they're ready to move. So does Jinx Solar, a Bible gap up on Friday. AMD I mentioned. Chemet, another semiconductor play. I like to see it break above the 200. It's failed a couple of times. It's got good earnings per share coming. Micron I mentioned already. NVIDIA we mentioned. Vishay Technology, another semiconductor play with earnings per share, 2% dividend, still behind underneath its 200-day moving average. And then Xperi, one that I gave you a couple of weeks ago, has continued to move up. A small semiconductor with some good earnings coming into the stock. We talk about growth. And then U.S. Steel, it's hard to buy this stock because it's been in a funk. It's got earnings per share growth. It has a multiple that's small. It pays a teeny weeny dividend. It's undergoing demand. And if there is a wall built, these guys were the ones who Trump has already said he wants to provide the steel. So, and we talked about Cleveland Cliff, and that's it. So again, these are stocks to watch, not necessarily stocks to buy. I put them into my watch list. In my watch list, I will be monitoring them for a number of different signals. And when I get those signals during the day, I may actually, if they're actionable, I may actually do something during the day. I'm watching for Q signals. I'm watching for my traditional signals. I'm watching for pocket pivots to occur during the day, up and down. I'm looking for viable gap ups. And then I have John Person's signals as well built into this. So there's a number of things that I'm going to look for during the day on my watch list. And then usually, at least on Monday, most of my purchases come from that. After Monday's up, all bets are off, and I've got a new list. So on that note, I'm going to say goodbye. Trade safe. Have a great week, and hopefully next week I'll feel better and be able to do this again.